I believe that the US government has to borrow more money than what we think, and therefore Bessent will have to issue more debt, and therefore he needs to find a way for these individuals to obtain as much leverage as possible through the banking system. And ultimately that means that there's more dollars floating around in the world because the US government is spending more money on stuff. And so that's kind of the TLDR on what a buyback is and how I believe it's positive for liquidity in the market, and which is why I think Bitcoin bottomed in that April 9th and will continue much, much higher as the government continues to borrow money and Bessent does what is necessary to make sure they're funded at an affordable rate. I think Bitcoin needs to go above 110,000 and on increasing volumes, maybe it reaches 150, 200,000, whatever that level is. I'm not sure, but I think that happens sometime in the summer or early third quarter. And then the rotation starts into various altcoins.
Confused by the headlines about U.S. government borrowing? You're not alone. At first glance, recent Treasury reports might make it look like borrowing is slowing down, but Arthur Hayes breaks it down and reveals the truth behind the numbers. What's really happening? The debt ceiling may be putting a cap on how much new debt the U.S. government can officially issue, but that doesn't mean spending has stopped. Far from it. Uncle Sam is still finding ways to keep the money flowing, and the full story is a lot more complex than it appears on the surface. If you're serious about understanding what's really going on in the economy and how it impacts your investments, don't just watch Subscribe Now. Hit that notification bell and smash the like button to keep this kind of content coming. We dive deep into crypto, digital assets, and macroeconomic trends every week, so make sure you don't miss out. Drop your thoughts in the comments, we read them all, and love hearing from the community. Your engagement helps fuel this channel's growth and ensures we can keep delivering content that matters. Thanks for watching, and let's get into it.
So it's a bit confusing, the recent results, because we are in a period of the debt ceiling. So the US government cannot borrow net more money. There's various different ways in which they can spend money and still remain underneath the debt ceiling. The first is the Treasury general account, like their checking account. At the start of the quarter, I believe they had something around $750 billion in it, and now it's around 450 odd billion. And so that means they spent money to fund the government. In addition, they have this bucket called extraordinary measures. It's a bunch of government programs in which they can underfund and again, spend more money to fund the government. So taking these three things into consideration, we can come up with an effective borrowing. And I actually was going through the math before this interview, and it appears that while if you read the press release, it sounds like, oh, the US government is borrowing less money. When you add back all these other factors, if we take a look at first quarter 25 versus first quarter of 24, it looks as if on the first pass that the government is actually borrowing more money than they were in the same period of last year. Now, I'm not exactly 100% sure on this. I've pinged some analysts who are a lot more in the weeds on exactly how the Treasury funds itself during a debt ceiling period. But I wouldn't really take what you read as gospel because, again, it's unclear whether the Treasury is borrowing more or less because we have this extenuating circumstance of the debt ceiling. Last year in January to March, we weren't in a debt ceiling situation, so it's very easy to understand exactly how much the government is borrowing and they're spending. The one reason why I think that the market is really underappreciating how much the Treasury is borrowing based on reading this recent announcement is if you look at the monthly data released by the Treasury, I think it came out a few weeks ago, January to March of 2025, they're borrowing 22% more than they were at the same period of the previous year. So the deficit is higher. So I would expect them to be somehow borrowing more money to fund the government, even if the headline from the recent quarterly refunding announcement says that, things are better than expected because they're borrowing less. So again, I think we're going to need to see some people who are a little bit more in the weeds on exactly how the Treasury funds itself, what their opinion is of this, to come to a conclusion as to whether this is good or bad for the amount of dollars entering the system. I believe that the US government has to borrow more money than what we think, and therefore Bessent will have to issue more debt, and therefore he needs to find a way for these individuals to obtain as much leverage as possible through the banking system. And ultimately that means that there's more dollars floating around in the world because the US government is spending more money on stuff. And so that's kind of the TLDR on what a buyback is and how I believe it's positive for liquidity in the market, and which is why I think Bitcoin bottomed in that April 9th, and will continue much, much higher as the government continues to borrow money and Besson does what is necessary to make sure they're funded at an affordable rate. I think we've been in a bull market since November 2022, when the FTX went under 15,000 or whatever the price was, and we're up 6x since then. We had a bit of a pullback, 20-30%, very, very natural for a crypto bull market. So I'm very bullish. I've always been bullish, even from January 20th to early April. We reduced our position a bit, but we were still long Bitcoin, long a lot of ETH. We have some structural term sheets that are coming off in relevant projects. So, we've been long the whole time. I think Bitcoin needs to go above 110,000, and on increasing volumes, maybe it, reaches 150, 200,000, whatever that level is. I'm not sure, but I think that happens sometime in the summer or early third quarter. And then the rotation starts into various altcoins. I think by the end of Trump's presidency, so end of 2028, Bitcoin will be around $1 million. Or we'll have caressed $1 million. It might be lower than that at that point, but I think we'll get to that nominal figure within the next 3 to 4 years. I don't think it'll be like 2021. I don't think every single altcoin just goes up, 100x. I think people are a little bit more discerning in what they're actually going to invest in. We'll have a new narrative, whatever that is, of something new that people are going to try to trade, and it'll trade at some crazy price. But the old coin, the dino coins in your portfolio that probably aren't moving for a reason. And I think a lot of those coins, for the same reasons, like high FDV, low float, no customers, no revenue, just some sex listing that went down 95%. Like, I don't really see why those should do well in the next cycle.
Arthur Hayes believes Ethereum is one of the most misunderstood and even hated assets in the crypto space right now. But ironically, that's exactly what makes it so powerful. When sentiment shifts, he says, ETH is primed for a sharp rally. According to Hayes, it's not the narrative that drives the price, it's the price that drives the narrative. And while he doesn't pin down a specific target, he suggests that if alt season heats up in late 2025 or early 2026, Ethereum could massively outperform, thanks to current bearish sentiment and low exposure among investors. In short, the market's apathy could be setting the stage for Ethereum's breakout moment. Got thoughts on ETH? Drop them in the comments we're watching. Let's go back to the interview.
I've owned gold for a long time. So I have physical gold in a vault. I own a lot of gold mining equities that I think are still undervalued given the massive rise in price in gold. I think that gold can go much higher from here because central banks are buying gold. And I still believe that the US is going to revalue their gold holdings much higher to depreciate the dollar against gold. So, I think gold could be $10,000 to $20,000 by the time we finish with this rally. We were underweight crypto from about January 20th until, late March, early April. And now we're mostly fully invested, mostly in Bitcoin. I think Bitcoin dominance is going to continue to rise, maybe to somewhere around the 70% level. And then we're going to start rotating into some high quality shitcoins that we like. If you use leverage, obviously it's very difficult. These downturns are painful, right? Because you get liquidated, or you have to sell positions, or you have to sell something that you don't really want to sell because you use the leverage. But as a long only fund, we don't really use any leverage, which helps us sort of not care what the price does, as long as we have a conviction that a long-term macro bet is correct. Mm-hmm. So I think the big change recently is the talk of a Treasury buyback. So Scott Bessent, the U.S. Treasury Secretary, went on an interview with Bloomberg about, I think, April 10th or 11th during the whole tariff tantrum situation. And the interviewer asked him, do you have any tools at your disposal to sort of help the U.S. Treasury market function normally? Because obviously we saw yields rise like 50 basis points over 2 trading sessions when stocks were cratering, and the volatility in the market was up. And so the question was, does Bessent have the ability to do something to help the market? And he said that he had this ability to do increased buybacks. And so what a buyback is when the Treasury issues a new bond and then uses those proceeds to buy an old bond. And the reason why this helps the system is that a lot of hedge funds put on an arbitrage trade. They buy a cheap bond and they sell a Treasury futures contract against it. They take the bond to the bank and they obtain financing for that. Now, the bank is going to give you more financing if it's the liquid on-the-run bond, the newest issued bond, versus a bond that's a little bit older. So if the Treasury is going to take a lot of these old bonds off the balance sheet of the banks and these hedge funds, then they're able to use more leverage to buy more Treasury securities at auctions. And I mean, there will always be meme coins. I think there's still thousands of meme coins created every day. I think it's going to be a lot harder to get people to trade them and buy them because people lost a lot of money trading these things. And so they learned it's a casino. You're going to lose all your money, most likely. It's very difficult to outperform. There will be some standout meme coins. I don't know what they are. I'm not really sort of deep in the meme coin degen landscape. But if something really pops from 0 to 100 billion market cap and has a good volume and trend, then I'll trade it.
So did you get rid of your meme coins by now?
We don't own any meme coins right now.
Do you plan to, or it will depend on
Depends on the price action. I think Ethereum has a better performance outlook, mostly because it's very hated. Everyone thinks Ethereum does nothing. They haven't done anything correctly. But number one, it still has the most TVL. It still has the most number of developers. It still has the most secure proof of stake blockchain. Okay, yeah, the price hasn't done as well from 2022 to the current moment. Solana obviously has done very well, $7 to what is it, 150, whatever the price is right now. But if I'm going to deploy a fresh unit of fiat capital into the system, I think that Ethereum could outperform Solana in this next sort of like 18, 24 months bull run.
So what are your price targets for Ethereum?
I have no idea. I don't have one. It'll go up.
Because like a lot of people say, okay, you should buy the most hated thing, but still Ethereum had all this TVL, the biggest number of developers, and it didn't perform at all. So like we are lower than we were before, even the previous cycle.
Right, and right now it's if we think that we're on sort of this, when we switch into alt season, whenever that is, I think that Ethereum could run pretty quickly because no one owns it. Everyone's short, and the price creates the narrative. People will figure out a reason why they love ETH because the price is rising. They figure out a way why they hate ETH because the price is falling.
Yeah, and as well with different altcoins which are not like top 10, did you make money or did you lose money?
I don't know. I don't really track it that. The positions are so small. We make money in the stuff we actually have conviction in. I might lose money in random punts that we take on the portfolio, but we limit the amount of size that we do on these things that we have no conviction in, so that if we lose money, it's not that much and we don't care. So that net, big bet on Athena, some other projects, those gains massively outperform anything else in the portfolio where we lose money.
The U.S. is borrowing more than it appears, just not through the front door. Behind the scenes, liquidity is quietly flooding back into the system. With the reintroduction of Treasury buybacks, this backdoor liquidity could supercharge risk assets across the board. According to Arthur Hayes, Bitcoin has likely bottomed, with the next leg targeting $150K to $200K. Meanwhile, Ethereum, despite being deeply hated, could become the stealth outperformer, thanks to under-ownership and bearish sentiment. And don't ignore gold, it's silently setting up for a major revaluation, like this breakdown. Hit the like button, subscribe, and turn on notifications so you don't miss the next macro or crypto deep dive. Want more insights? Check out another video from the channel right after this one. We cover everything from altcoin setups to global liquidity trends. Drop your thoughts in the comments. Where do you see Bitcoin, Ethereum, and gold heading next? See you on next video.